Hey, welcome everybody. This is Mark Dannenberg. I have our entire trading and education team with me here tonight. Aaron Rumley, Michael Castor, and Kristen Kane. So we're going to be hearing from them in a little bit when we get into the Q&A. But I appreciate everybody being here. Let's just go ahead and get started. So the purpose of this Q&A is to give each of you an opportunity to ask questions, look for clarification, deepen your understanding of the trading journey that you are on to build your own personal trading business. We have a mantra here that is learn to trade, trade to earn. We strongly promote that people trade in a simulation mode, paper trading as they are in learning mode, that they participate in a well organized education program, which we offer. So learn to trade, and then once you've really validated your own knowledge and understanding and skill set, turn on some live money action and trade to earn. That's what we're here to help you learn how to do. So questions for this evening will be about anything that we are involved in, anything that we support, anything that we teach. We're here to teach, motivate, and inspire. The adaptive entry system is the primary tool that we use for identifying trends. If you have questions about that, would love to talk with you about that. Adaptive entry system is offered by New Cycle Trading and Analytics, and we represent them in this effort. We have a live trading room for real-time trading support. Think of that as ongoing real-time education throughout the market day from 8:45 a.m. Eastern to 4 p.m. Eastern, and it's a great opportunity for you to really look over our shoulders and not only see the charts of the adaptive entry system, but understand how to properly interpret the signals, when to get in, when to stay out, when to exit the trade, how to properly monitor that. Futures trading education is a big part of what we offer also. We're here to teach you the risk and reward of futures. Futures are often misconstrued as something that is highly volatile. A lot of people steer away from futures because they hear horrible stories about it. But most of those horrible stories are either from or about people who had no knowledge or education or practical discipline about how to trade them. We teach you how to properly manage your risk and how to leverage the reward of futures. And using futures trading education, we use the adaptive entry system to identify the trading signals that we can trade on futures. So we'll talk a little bit about that in some more in a bit. The personal trading plan, if you have questions about that, we built this, designed it to give you a way to view your business as a personal business. You have your own small business that is a trading business. The personal trading plan helps you identify what your profit and loss run rates are, and then use those to project forward, assuming that you can achieve the same level of performance going forward, and then update and modify that on a daily basis. It's really an outstanding tool. It's a very simple tool to use. We can help you understand the value of it, but you're going to see here in just a few minutes how the projections really can inspire you to continue your trading and really make a commitment, a personal commitment to focus your learning and training on being a successful trader. And then for options traders, we have Profit Builder Plus for options education. If you're interested in doing a deep dive on options education and really learning how to not only understand the very basics of options, but also understand some of the more advanced spread strategies, management strategies, profit generation strategies, we have an outstanding program called Profit Builder Plus. All right, so we're going to move forward here. Now, one of the things that I think is extremely important for every trader who is serious about building a personal trading business is to make use of the personal trading plan at the end of the trading day. Now, this is a tool that will help you understand what your current run rate of profits and losses will project out to. If you're just getting started out, it's a good way for you to keep track of your day-to-day performance. Traders have a tendency to fall into a trap of highs and lows. There's an emotional roller coaster involved in trading. You don't feel very good today because you lost. You feel euphoric the next day because you won, but there's no continuity unless you actually keep track of your performance and have some way to see if I was to continue earning at the same rate I am, what that projects out to over the course of a year. So I'm going to jump over to our personal trading plan. And actually, I'm going to back up here just a minute. I'm going to start with, here we go. Start with our performance. So thanks to Aaron, Aaron designed this tracking tool that we use for our trading in the live trading room. And it allows us to track the details of every trade. So see that today there's the details of every single trade, the entry time of the trade, whether it was a short or long, what chart, we're usually trading on a 5-minute chart, what strategy was being used. It's all part of the adaptive entry system. And then whether it was a profit or loss, and that's stated in terms of the number of points. We focus our tracking for within the live trading room on trading the NASDAQ 100 futures. And we do so because it's a very easy way for us to help you understand how to interpret the signals on the adaptive entry system. Once you understand that, you can apply the exact same logic to most any futures contract, and you can also apply it to trading options, and we'll chat a little bit about that later. But once we have that detail listed on a trade-by-trade basis, which we do every single day, we're able to then look at a daily summary, and we can sort this into a lot of different configurations and categories. One of them is starting at 9:30 a.m. Eastern time and trading until 12 noon, and taking all 4 of the adaptive entry system signals. And on a day-to-day basis, we can see, well, how many points. And by the way, NASDAQ 100 futures has a value of $20 per point per contract. So you see 65 points, that is multiplied times $20 in order to see what the overall profit was for that day. And then you can multiply it times your multiple of contracts if you have more than one contract. So that's one category. Another category that we track is trading from 7 a.m. to 4 p.m. Eastern and taking only trending trades. So it's the trend bias trades as well as the trend continuation trades. We don't take the consensus signals and we don't take the momentum signals. And this was designed so that we could show our trading community that there are variables to how you trade, the times of day that you trade, and the types of signals that you take. We've been tracking both of these categories on a personal trading plan since July of 2020. And then in January of this year, 2021, we added a third category that we're also tracking. And this basically corresponds to exactly what we do in the live trading room. The live trading room opens at 8:45 a.m. Eastern and it closes no later than 4 p.m. Eastern. Sometimes we close a little earlier, generally between 3 p.m. and 4 p.m. we close. And we're taking all of the adaptive entry system signals plus fractals. So these 3 categories give you a real good idea of what the variable nature of profit production can be, performance on a day-to-day basis, and it also gives you an idea of where you could focus your time and attention. Now, it's not just limited to those categories. Those are the 3 that we've selected to trade and track in a personal trading plan, which I'm going to show you here in just a minute. But at any point in time, we can help you in the live trading room, or even tonight in this Q&A, we can help you identify the right time frame for to track and the right signals to track. We've built this, Aaron built this research tab in the tracking tool, so we can select any combination of signals, and we can select any time frame to start, any time frame to end, and it will display for us how many days, first of all, how many trading days. For example, in the 8:45 a.m. to 4 p.m. category, taking all plus fractals, all the signals plus the fractals, we have in our database now 213 trading days, and the average profit per day is just over $800 per day. There have been 49 losing days, So that average is inclusive of the losing days. And we take about 31 trades, a little over 31 trades during the 8:45 to 4. That's an average. And we have a 74.4% win-loss ratio. So we can change that to anything you desire and help you identify when you want to work your business. So it's a very powerful, very robust tool. The more data we collect, the more integrity it has. And we're pretty excited about the fact that most any single category or time frame that we track, you should be able to produce positive results. It doesn't mean that you're going to produce positive results every day, certainly. And certainly there are some weeks where you're not going to produce positive results, but I'm going to comment on that when I get to the personal trading plan here. So I'm going to jump over to the personal trading plan. Those three categories that I mentioned, the tab here labeled LTR all is actually the 9:30 to noon. All signals. The LTR TB10 is the 7 to 4 trend bias and continuation. And the LTR all and fractals is the 8:45 to 4. So we have everything entered in terms of actual performance through today, and everything in blue, that's highlighted in blue, is our past history. That's already behind us, and those values are locked in. Anything out in front of us that's white is a value that is subject to a profit, a loss, a bigger profit than what we anticipated, a smaller loss, bigger loss, smaller profit. So we're going to forecast out into the future based on the actual run rates and the actual values of profit and loss that we've achieved to date. So let me start with the 9:30 to noon category. What we're looking at up here is we have 41.6 weeks under our belt out of a 52-week plan. So this is designed to be a 52-week plan. So we have just over 10 weeks remaining of our 52-week plan. And during those 41.6 weeks that we have shown all of our trades, all wins, all losses, we've had 72 losing days. Now we look at the losing days. We want to make sure that we are 100% transparent, not only in our reporting, but transparent and honest with ourselves. 72 losing days, that's a reality in trading. By default, everything else is a winning day. So now these values right here are going to help us understand what our averages are. In the 41.6 weeks that we've traded so far and tracking in our personal trading plan, the average winning day has earned 21.26 points. That's the average winning day. The average losing day has been a loss of 43.37 points. Those are our valid run rates. That's what we've accomplished today. So what we do is we take those same values and we put them in our forecast going forward. So these numbers in blue won't change. They are already in our history. Going forward for the next 10 and a half weeks, we are going to assume that we could trade at a reasonably similar level to what we have in our history. So we're going to assume that going forward, our average positive day is 21.26 points, and that our average negative day is 43.37 points. We're also going to assume that we're trading no more than 3 contracts. If I were to scroll all the way back to July when we started this, you're going to see that we started with 1 contract, and the personal trading plan assesses the value of our account balance, and we take a percentage of that, which in our case is 10%, and we're willing to set that aside to allocate to the contract margin that is required. There's a $500 margin required in order to trade each contract. So the personal trading plan then scaled us up to 2 contracts, and then it scaled us up to 3 contracts, and we put in a maximum limit of no more than 3 contracts. So even as the account grows, we won't have a scale beyond 3 contracts. That's a comfortable level for us, and that's a value that each trader will choose on their own. You might decide that you want to trade up to 5 contracts. Someone else might decide they never want to go over 2 contracts. You know, that's a variable that is entirely up to you. So all of that together, the history, run rate, the forecast going forward for the next 10 and a half weeks, a maximum of 3 contracts says that the account value should be somewhere around $123,334. We won't know exactly what it's going to be until we have completed the last trading day in the 52nd week. This is an account that started with $5,000. So going from $5,000 to possibly $123,334 in a 52-week period, I think is a pretty strong statement. And that's you committing your time and trading from 9:30 to noon. That's knowing that you're going to have losing days, you're going to have winning days, and you don't get emotionally tied to any particular day or any particular week. This is a big picture, on the horizon. Where can I be in 12 months? So the second category, 7 to 4, taking just the trend bias and continuation trades. Same 41.6 weeks. There's been 75 losing days during that period of time. 26.1 is the point value for our average winning day, and 43.11 is the point value for our losing day. We're going to have wins, we're going to have losses. Keeping to a maximum of 3 contracts in this category also. This account, which also started with $5,000, appears to be headed for account value of somewhere around 184,471. Again, that can change. The positive days could decrease or increase. The negative days could decrease or increase in the next 10 and a half weeks. So whatever they are at the end of each day, we plug them into our forecast. We take our actual run rate to date and we plug it into our forecast. So there's almost $185,000 potential, having started with $5,000. And then the last category that we're tracking, we started a new category at the beginning of this year. So this category has only been in place for 15.6 weeks. There have been 25 losing days during that 15.6 weeks. The average winning day is 38.09 points. The average losing day is minus 61.88. Now, there have been a few bigger losing days more recently. That's just part of the market. That's just part of the natural cycle of things. Again, we got to have a big picture view out on the horizon. What's our 52-week target? This account and the first trading day of January 2021 started with $5,000, and we're also limiting this account to 3 contracts. We've already scaled up to 3 contracts. In fact, if I scroll back up here, you'll see we started with 1 contract. We got up to 2 contracts. We actually got up to 3 contracts, and then we had a fairly sizable losing day. So the personal trading plan took us back to 1 contract, and then we rescaled back up to 2, and then back up to 3, and then we've been at 3 ever since. So right now, and again, we're only 15 and a half weeks into a 52-week plan here. Right now, the projection for a 12-month period is about $261,000. I think once we get 3, 4, 5 months into this, well, we already are 3, sorry, 3 or 4. Once we get 5 months into this, we'll start to see the run rate, the daily variable on the run rate stabilize a bit more, and the future projected number ends up becoming less volatile, meaning it doesn't change as much from day to day. Now, there was a question that was presented to me, and I wanted to address this before we get to the formal Q&A. I wanted to address this here on this recording so that it's available for others to learn from. I was asked the question, so how do I handle my trading account when it's my intention to live on my trading account? When can I pull money out, and what happens if then the next week I lose? That's very stressful. And that statement is absolutely true. So in a perfect world, if you're going to start a trading business, you need to first of all learn to trade. You need to learn to trade. And there's going to be, in my opinion, an investment of 1 to 3 months of learning, testing your own knowledge, validating your confidence level in trading, and for yourself personally, validating that you have the right metrics that you're using, meaning the adaptive entry system metrics. We're here to support you in the live trading room regarding that. So that's number 1. Number 2, You have to have the capital to trade. Now, in all three of these cases, we're only starting with $5,000. You can start with whatever you choose, but I would never recommend that you start trading more than one contract when you begin. So one contract may not give you a income level that you desire to transition out of whatever you're trying to and into being a full-time trader. And I think there's another key which we've not talked very much about here as people are getting started, but I think it's really important that you have, if you're really going to do this right, that you have 12 months of your income needs set aside that you're living off of. And what you're doing is you are growing your personal trading account and your personal trading business over the course of 12 months. That right there is a huge stress release because you're not trying to trade from day one and saying, well, at the end of the week, I need to take out what I need to live on. That is not a strong success formula. You need to have some buildup of your account before you start removing funds. Now, there's a column on the personal trading plan that allows you to take out funds whenever you want. You can plan for that. But I think it's really important that you have 1 to 3 months that are committed to building your knowledge base and your confidence base and going through a few different market cycles and understanding, learning from Aaron and Michael how to properly interpret the signals. During that period of time, you want to have your income needs met. That's set aside for you. Maybe you're still working, maybe you still have income from some other source. And then as you get further out in time and you start to feel more comfortable, you could start to transition to taking money out of your account as you're learning. I want you to avoid the problem that a lot of people do encounter, and I hear from people saying, you know, I tried this, I did it for a month, and you know, I just didn't make the kind of money that I need to make. Well, I think you have an unrealistic expectation that you're supposed to be able to make that in a month. I am 100% confident that you can make what you need in a month. I can't guarantee you will. Everybody has different skill sets and different aptitude levels, but I'm confident that you can make what you need in a month. But don't put so much pressure on yourself that you make what you need and you take out and you're right back to the beginning. You're right back to, now I'm back to one contract in the beginning. No, you want to plan this properly. So if I see I'm going to back off to this smaller one. If I see that my income projection over a 12-month period is $123,000, I'd actually like to grow and see after 52 weeks what my actual income was. And then I can decide at the end of 52 weeks how much of that to pull out to feed my lifestyle and to give me the month-to-month income that I need. And then I pull that out, set it aside, and then I do the same thing the second year, and I start to regrow my account. And maybe in the second year, you want to make your contract max 4 contracts or 5 contracts because now you've gained a full year of experience and you're feeling confident, you have a good stride going. You can do no more work, do the exact same amount of work that you did in year one, and you can just add 1 or 2 contracts and you can increase potentially the income that you earn over that year. But let it grow over the course of that year, and at the end of the year, pull that out in order to fuel your living expenses. And now what you've done is you've successfully transitioned into a profitable income producing trading business. So I think it was really important. The question that was asked just prompted me to think we haven't talked enough about the importance of how to manage your money while you're in that learning to trade before you trade to earn period of time. Okay, so just about ready for questions here. I just want to close that overview of the personal trading plan with a couple of thoughts here. A lot of traders struggle with the emotional side of risk and losses. They don't really know how to manage it. The personal trading plan helps you get around that. In fact, what I was just talking about, the personal trading plan helps you see what your big picture 52-week horizon income can be and allows you to plan for that for the following year being your income. But during the first year, or at least during the first 6 months, let it grow, let it build, and have something set aside that you can live on during that that period of time. Personal training plan helps you understand when is enough, when you should or could stop trading for the day. What's a reasonable profit and loss target? If I knew that my 52-week income was more than adequate to meet whatever needs or expectations I had in the projection, and I know that in order to achieve that number, my daily profit performance is, say, 21 points. If I hit 21 points for the day, maybe I hit it in the first 45 minutes of trading, I might decide to stop trading because I know that what I just did was I achieved a point value, a profit value that says I am still one more day on pace to hit the profit income over a 52-week period that I desire. The PTP from the live trading room performance that I just showed you is ranging anywhere from 123,000 to 261,000 in potential income over a 52-week plan. Each account started with $5,000, and the 123,000 is requiring as little as 2.5 days per week. Sorry, 2.5 hours per day. I said that completely wrong. 2.5 hours per day of your time commitment. So the last thing I'll say about that, I've said this in prior Q&As, but a simple statistic data point: the U.S. Department of Housing and Urban Development states that the median household income in the United States is $78,500. What we're showing you is an opportunity to be well above that median income. And maybe your expectations and your desires are even less than what I showed you. Well, that just means it's going to be that much easier for you to possibly achieve that. So learn to trade to earn. We can't emphasize strongly enough the importance of learning to trade. I have heard too many people who jump in, they like it, they're successful for a week or 2 weeks, and they jump into live money, and then I get an email from them and say, well, I've lost a lot of money. Well, it's really because you didn't commit yourself to doing it over a period of time that would allow you to actually achieve a consistent level of success, and then it's just a very natural step off into live trading. So we offer futures trading education, options education, and New Cycle Trading offers the adaptive entry system, live trading room, and then of course the personal trading plan. We collectively build all these tools to help you build your own personal trading business. And if you want more information on any of that, you can go to optionsmoneymaker.com/investor2. All right. Let's go ahead and start with questions. While we're taking questions, I'm going to put on the screen the adaptive entry system. This is a 5-minute chart of the NASDAQ 100 futures, and it shows each of the 4 adaptive entry system signals to go long or to go short. So if there are questions about those, we can respond to those too.
Our first question is from AR. They're asking, hello, Mark. I have a few questions. I'm fairly new to investing in the stock market, leaning more towards trading options. I've taken quite a few losses since I began trading at the beginning of this year. I have a Robinhood account, E-Trade account, and Webull account. Webull account will not let me trade options the way I would like, so Robinhood has been my main trading platform. If I do more than one option play in a day, meaning buying and selling more than one contract on different stocks or even the same stock within a day, is that considered day trading?
So first of all, it doesn't matter what broker you use as long as they are set up for you to be able to trade the way you want to. I've never traded at Webull, and I've never traded at Robinhood. Robinhood gets a lot of press. A lot of it is negative press, but they get a lot of press. And I've got opinions about how well they do in terms of helping their base learn how to effectively, how to properly trade options. E-Trade, you mentioned E-Trade. That's where I prefer to do my options trading. It's a very easy platform to use. In terms of day trading, so the pattern day trading rules state that if you're going to open and close a trade in the same day, that you have to have a minimum balance of $25,000 in the account, maintain a balance of 25,000. And you should call the broker and just confirm this, but because I'm going to give you information based on my understanding, and I've been doing this for a long time, but I don't want to give you bad information, and I'd like you to call and make sure, confirm this. But you can trade up to 3 times over the course of a 5 business day period where you're opening and closing in the same day and have still below $25,000. If you trade a 4th time where you're opening and closing on the same day, then you get a margin call, and you don't really have to give them any money, but what they do is they put you on a timeout. You can still trade, but you can't trade anymore day trades for I think it's 90 days. So first qualifier is 25,000 or more in your account allows you to day trade. And then there's other different configurations. You know, somebody will say that if you have a cash account, it doesn't matter, you can do those. But if you have a cash account, you can't trade all the spreads. So what I would suggest is if you have the capacity, 25,000 in your account, maintain a minimum balance of that if that's available to you. If not, then don't do more than 3 day trades in a 5-day period. And if you really are actively trading and you find yourself with profits that you want to lock in and you're concerned about pattern day trading, there are options trading techniques that we have taught that will teach you how to lock in the profit that you have without closing the position, but not losing the profit that you have, without then getting dinged as a pattern day trader, and still be able to then close the position the next day to take the profit.
You'll also want to, I know Mark already said check with your broker, but you'll want to understand how your broker treats spreads, the closing and opening of a spread together, if that's one day trade or if it's 2 separate day trades since they're individual legs.
Mark, Kevin's asking, is there a breakdown of performance based on the time frames trading all signals? For instance, what would the 9:30 to 10:30 time frame look like?
Yeah, so Kevin, I can show you that here. Trading all signals, if we're trading all signals and fractals, and you wanted to start at 9:30 in the morning, and you wanted to finish trading at 10:30 or take your last trade no later than 10:30, in our 213 days of history, we've averaged just under $230 a day in that hour. There have been 51 losing days in the 213 days, and you're going to average just over 6 trades a day trading in that 1 hour time period. And it's got an 80.3% win-loss ratio. So if you're in the live trading room, you can ask Michael and Aaron for different configurations, and as long as they're not, actively focused on a trade, they're happy to change these values and share with you what that would look like.
Mark, Rob is asking, could you explain taking all fractal? Is that a 5-bar pattern?
So Rob, what I think you're asking is all in fractals, which is the terminology that we have on our personal trading plan and on the performance tracking that Mark was just showing. So what all in fractals means is that we're taking all AES signals, all of those highlights that are on Mark's chart right now, and also trading fractals as well. Fractals are the middle bar of a 5-bar series where it's the highest high or the lowest low. And we've done actually a video education on that you can view. I have the link ready to send to you. It's at newcycletrading.com /education. But we have an education video on there on all of our AES signals and also trading fractals as well, how to identify them and how we trade them. But essentially, Michael always says you just hold up your hand and it's your middle finger. You have your thumb and your pointer that are lower, And then you have your ring finger and your pinky that are lower, and the middle finger is essentially the fractal. So, and that can go either way. You can flip your hand upside down for a lower fractal as well. And then fractals are identified on our chart by a white arrow, either an up arrow for an upper fractal, which is the high of the bar, or a white arrow pointing down for a lower fractal, which is the low of the bar.
And so here's a great example right here. This is an upper fractal. The fractal price point is the high of that price bar. And it's a fractal because the 2 bars before it had lower highs and the 2 bars after it had lower highs. In this case that Aaron was talking about, we have a lower fractal. The price point of the fractal is the low of that bar. The 2 bars before it had higher lows and the 2 bars after it had higher lows.
Next question is also from AR. I've split up their questions. So it's about options. How exactly do you pick what stocks might be profitable to do an option play on?
Yeah, so my opinion about what stocks to trade is you've got to develop some knowledge and experience with a watch list of stocks. We have a watch list of stocks that we trade. So, we've got Amazon, Booking, Google, Netflix, Shopify, Tesla, Chipotle Mexican Group, Apple. We don't talk about all of those every day, but this is my personal watch list. So these are stocks that I've traded over the years, traded options on over the years. And I think it's really important if you're going to trade options that you have an idea of what those stocks do, how they perform. One of the great starting points, in my opinion, is to start by trading the indexes, the NASDAQ 100, the S&P 500, and the Russell 2000. You can get very familiar with the indexes, and you don't have to be quite as concerned about understanding American style options versus European style expiration, which can catch you off guard if you're not alert to that or if you don't even understand it. There are services out there that allow you to plug in the criteria that you've decided you want to use to search for stocks, and it will come back with a list of the stocks that meet those qualifications. Now, I've used those services in the past, and this is just my personal bias. I'm not a big fan of taking options plays on stocks that came back to me on a list, but that I've never traded before, that I'm not familiar with. So I like trading stocks that I'm familiar with. I like trading the indexes. And if the indexes are too expensive to trade in terms of the option price, then the ETFs, like the Qs, which track the performance of the NASDAQ 100, SPY, which tracks the performance of the S&P 500, the Diamonds DIA tracks the performance of the Dow, and what am I missing? RTY, where is that in here? IWM is in here somewhere. Oh, IWM, which tracks the performance of the Russell 2000 index. If you focused your initial experience of trading options on the indexes or the ETFs that track the performance of the indexes, that would give you some really great experience, and then you could gradually add a stock or two to your list.
Mark, Kevin's asking on the times from 8:45 to 9:30.
Okay, so 8:45 to 9:30. About $69.50. There's 209 trading days. 71 negative days out of those 209. And about a 71.5% win-loss ratio. So that's including fractals. That's all plus fractals. 8:45 to 9:30. That's a 45-minute period.
Mark, Elizabeth's asking, do you trade out futures or options?
Well, we trade both. So we teach options education and we teach futures trading education. In the live trading room, we are primarily focused on futures because there is a lot of activity available on trading a 5-minute futures chart, NASDAQ 100 futures. And also it invites a lot of people in our community to come and participate in activity during the day without having to be concerned about being a pattern day trader. There's no pattern day trader rule when you're trading futures. So I could trade 30 trades in a day, and there's no pattern day trader issue. It's just a matter of getting into the trade, following the adaptive entry system signals, and getting out based on those same signals.
Mark, Bob is asking, what is the history trading all signals from 8:30 a.m. to 10 a.m.?
8:30 to 10. Okay, so Bob, you said all. I'm going to show you all with fractals first, and then you can tell me if you would prefer to see it without fractals. 8:30 to 10. Okay, so 8:30 to 10, all including fractals. So that's 5 signals. That's the 4 adaptive entry system signals, and then fractals on top of that. $235 average per day. That's per contract. So if you're trading one contract, that's an average of about $235. That's over a period of 213 trading days. There have been 61 losing days. You're going to average about 8 trades a day during that period of time, and about a 74.7% win rate. Now, if you wanted to see all without fractals, so we go from 234 a day to about 165 a day.
Next question, so back to options. What determines and what are the factors in which an option trader can decide which way a stock will go to maximize profits and limit losses? I'm going to say something real quick before you take over, Mark. I think the most important thing is to be aware of what you're trading, be familiar with it. Piggybacking onto something that's in the news like GameStop or Disney, something you don't know a lot about, you haven't seen what the normal price action is or how the options price behaves, that's not something I would recommend. I personally like the indexes because I am very familiar with them, or their ETFs, as Mark talked about earlier, which are a less expensive option, just because they aren't subjected as much to news related events for a specific stock, or earnings announcements that come out. It kind of all gets evened out in the long run, and they're, in my opinion, easier to project out a direction that they're heading by just using even simple support and resistance levels.
Yeah, so it's the key to knowing, first of all, what to trade is what Aaron's talking about and what I mentioned. Get familiar with something, get familiar with stocks, get familiar with indexes, get familiar with ETFs. We have invested a considerable amount of time working with New Cycle Trading to create a set of signals that help you understand when to buy, when to sell. And that right there is, in my opinion, 90% of the game of trading. That's your business of trading. The adaptive entry system signals, in my opinion, are going to give you a huge head start against most other traders. You can find hundreds of different technical indicators that you can learn how to use, learn to understand, and then you're going to start pairing together different technical indicators. Well, we've done that. I mean, thousands of hours of that testing, and we have embraced and brought to our community the adaptive entry system signals. We've continued to evolve the adaptive entry system. There are additional systems that we are in the process of validating and testing, which I think even add more value on top of the adaptive entry system does. So just as an example here, I like Amazon and I like options on Amazon. And if I was to take a look at a 10-minute, a 30-minute, and a daily chart on Amazon, I can see that the adaptive entry system signals are printing just like they do on the NASDAQ 100 futures on a 5-minute chart. So if I take a look at this 30-minute chart, for example, on Amazon, I've eliminated all of the signals except for the trend indication signals. The T is a trend indicator, the T plus is a trend continuation. I don't have consensus signals like I do on the 10-minute. I don't have momentum signals, but if I just looked at a 30-minute chart, so let me blow this up here a little bit. If I looked at a 30-minute chart and all I was interested in was taking trend signals, the second red bar is a short trend, meaning you want to buy to open a put. So there's a put entry right there at 12 noon on the 19th of April. And boom, nice move to the downside. Now, if you weren't out of it before the cycle actually ended, then you would have been out when this white bar opened. So the cycle is done. But part of becoming familiar with a stock is learning how much can I reasonably expect it to move. So I've been working with Amazon and looking at taking trades on Amazon where a reasonable move just to take a profit out of the trade. I'm not looking for a long hold or a big profit, but I want to get something out of it. And a very reliable profit on Amazon that I'm finding, and I would expect each of you, if you're going to trade Amazon, to do your own research on this. Don't just take this from me. I'm just sharing with you what I've kind of zeroed in on so far, subject to change, is if I looked for 10 to 15 points of profit off of each Amazon trade, that seems to be pretty reasonable right now. So it might end up being less than that when I actively trade Amazon, might end up being more than that. But if you had 10 points of profit trading one contract of Amazon at the money, 10 points of profit means that the stock's got to move about 20 points. And that's assuming that you're trading a 50 delta. So if you don't understand options, options move at the rate of delta relative to each $1 move of the underlying stock. So, here's a $10 move to the upside. Here's a 10, way more than 10 move to the downside. This one didn't work out, but you're out of it here for a small loss. This one, I don't think it's completed yet. Not really looking at the detailed numbers. 47. Oh yeah, so you got about 10 points there. You got 10 points here. So stocks are very lucrative to trade options on, especially when you're using the adaptive entry system signals. Here's another one that gave you a nice 10. You could re-enter on the continuation for another 10. You could re-enter on a second continuation, or actually a third continuation for another 10. But I'm comfortable going back and scanning this because I'm comfortable looking at Amazon. I've been looking at it for quite a long period of time. So that's what I think you should do, is become familiar with stocks, but start with indexes. S&P 500 is a great index to start with, and if you think that's too expensive, then trade SPY. SPY will give you the same patterns, same opportunities. It costs less. You get less profit per movement, but it's a great place to start. Okay.
Is it too early to buy options for airline stocks? John is asking.
Yeah, I can't help you with that. I don't look at stocks in terms of, I never look at fundamentals on stocks. I'm a technical trader, so I'm only looking at the patterns. There aren't any particular airline stocks that I keep in my watch list. So if I looked at an airline stock, I could quickly give you an assessment just based on what I see in the adaptive entry system signals. But again, I'm not familiar with it, so that's not an assessment that I would be comfortable with. I think you need to go back in history and do some of your own evaluation. When you say, is it too early? I'm going to just assume that you're applying your knowledge of what happened to the airline industry and news into that question. We don't pay attention to the news. We don't pay attention to those other factors because what we're looking for are the technical signals that will help us understand where the technical market is projecting the move.
And I'm just going to lump into this. What do you think of Disney? Disney's, I'm assuming DIS is Disney, right?
Yes, it is.
It's not one of our most frequently traded stocks or a watch list stock. So it's basically what Mark was just saying about the airline stocks is going to apply. You have to use your technical indicators to see what it's telling you.
Yeah, I just pulled up Disney. I could look at it and go, well, here was a indication to go short, but I don't really know how that move fits into Disney history. Here's a technical indicator to go long. I don't really have any history with it. If I scrunch it all together, I've got some big picture, like old school technical evaluations that I could do on it, but I would need 6 months of observing it or going back and back testing signals before I would feel comfortable having any kind of an opinion on that stock.
Mark, Bill's asking, can you explain when to place fractal trades, and is the upper fractal and lower fractal the target and stop entry depending if you are going long or short?
So Bill, if I wanted to trade fractals, so let's say we're trading right around in this range. Now I'm back on the 5-minute NASDAQ 100 futures. Let's say we're trading right around in this range. I would go out onto my futures trading platform and I would place a limit order to go short if and when the price moved to or below the lower fractal. So in this case, the lower fractal was at 13,887.75. I would put a limit order to go short at 887.75. And this is when we're trading somewhere up here. And then when the price breaks below that price level, which it did over here, it will activate my limit order and it will automatically put me into the trade short. And because everything on our futures trading platform with Infinity Futures is automated, as soon as we break that price level, we break that lower fractal, and we're in the trade, all of my stop, my protective stop, and my profit target are already set. I don't have to do anything else. So we use the same protective stop of 20 points of loss and a profit target of 10 points where we lock in 5 once we get to 5 points. So on an upper fractal, where's a really good upper fractal here? Oh, here's one back here. Let's say we're trading down around these red bars here and that new upper fractal formed. Now I don't know that it's an upper fractal until it has 2 fully printed bars to the right of it. Once I have 2 fully printed bars to the right of it, I can see that there were 2 bars to the left that had lower highs and 2 bars to the right that have lower highs. So now here, I'm on this bar, which happens to be the 1255 bar, and I go out, I scroll up my trading platform DOM, and I put a limit order to go long, to buy at the price level of the upper fractal, which would be 13,859. Over here, we broke 13,859. So we are now in the trade, and we moved up to about 8 points on that. So it didn't quite hit our profit target, but everything would be set automatically for that trade to execute and then close.
And while Mark is right, so he's talking about setting the order when it is an official fractal, when the fractal has officially formed. You will hear Michael and I talk about a fractal before it forms in the live trading room, and also say it's most likely going to form. We're 100 points away from it. We're putting the order out now, and we will choose to put the order out early and monitor it so that if we all of a sudden reverse and start to get close to the fractal order and it's not valid yet, we can just quickly cancel it. The reasoning behind that is it's essentially a line that you're in when you place an order, and by getting the order in earlier, you're in closer to the front of the line. So sometimes, like Mark, can you go to that blue high right around 16? So that next bar after the fractal, we pulled down a good amount. And so with it forming, Michael and I would just start looking at that fractal, and at the beginning of the next bar, we'd probably start putting it out there, knowing that we had plenty of room, that if we started to reverse back up, we could cancel it before it comes valid, which would be on the 1610 bar. So you'll hear us call out in the live trading room, there's a fractal forming, it's not valid yet. And then sometimes you'll hear us say, we're putting the order out there. We're so far away from it, just monitor it. Remember, it's not valid yet. So if we end up coming close to it, you'll need to cancel it out. And then also we use fractals as stops, because fractals can be a natural form of support and resistance. So sometimes you'll see us even just create a new fractal that's maybe a point difference, or even sometimes just a couple ticks difference in the prior one. And so that's why we'll use a fractal as a stop, because sometimes it'll come close to that, but it won't actually break the fractal, and then it'll reverse and go back into the direction of the position that we're holding.
Here's a great example right here, Aaron. This is a valid trend bias signal to go short. So you would have been short at 13,893.75, 893.75. The upper fractal is at 13,900. So that's about a 7-point, less than 7-point risk. So why would we hold 20 points of risk, which is our default risk, when we could adjust our stop to the fractal? One of the reasons we like to use the fractals, both as an entry to take profits and also as a stop, is because there is a very high probability that if the price action is to move below a lower fractal or to move above an upper fractal, that the price is going to continue to move in that direction. Doesn't happen all of the time, but that's one of the valid reasons that we use fractals as stops. This is a really great example here of going short. I'm not going to hold a 20-point risk on that when I've got a fractal here that's only 7 points away.
Okay, Mark, back to the personal trading plan. Neil would like to know about the 8:45 to 10:30 time frame. And he's looking for all trades and then also fractals. All trades and fractals, sorry about that. And then just for fractals.
Okay, so 8:45 to 10:30.
Correct.
So
with the
there's
daily
all
target of 200 or 400, I'm assuming that's dollars. So that'd be 10 to 20 points.
10 to 20 points. Okay, so first of all, without the 10 to 20 points, 8:45 to 10:30, all and fractals is about $271. Now, if I put in 10 points as a target, it's an average of about $106. If I put in 20 points as a target, it's an average of $206. And then if I did those same analysis without fractals, 20 points is $158. 10 points as a profit target's $105. Hardly worth trading. Just being sarcastic here, folks.
And then fractals only.
And then without the profit target, all excluding fractals is $184. and then fractals. This is really a great little tool that
Somebody was
built.
really smart that did that.
Yeah, I'm glad I was able to help you with that. $105 on fractals only, 8:45 to 10:30, and then 10 points as a profit target, $71.20 is $102. So there's quite a range in there, and you can study this. This is on a recording, so you should be able to pause that and just kind of process a little bit about what that means to you. Erin, could you just take 1 minute and explain what the profit target is and what
Sure.
that does?
Can you set it to my favorite setting?
I'm
All
going
signals
there.
and fractals, 8:45
8:45
to 4.
to 4. I was already there.
So the profit target means that once performance hits 20 points of profit or more, you stop trading for the day. The or more part is, for example, you've taken 3 trades.
Erin, you cut out. Did we lose you?
Yeah, you probably did, Mark. She's been having issues this week.
So what Erin's telling you is that by putting this in here, what that means is that the target is 20 points. Now, that doesn't mean that you will make 20 points each time. It means that the first trade that closes that puts you at or greater than 20 points for the day, you're done for the day. So that's what that assumes. And using a 20-point profit target, $350 is the average daily performance. Erin really dug into all of this data in our database, and she was able to narrow down the profit target performance to 20 points. It's a very realistic number. And what happens frequently in our live trading room is we have people who they hit their 20 points or better, and they're done for the day. It might happen in the first 30 minutes or 45 minutes or hour of the trading day. And it's got an 84.4% win-loss ratio. That's a really strong, positive win-loss ratio. Now, it doesn't mean that you're not going to have losing days, and there are losing days, but it just means that that win-loss ratio is huge, and it's showing a strong level of consistency. So we have a lot of people in our live trading room who look for that profit target. And I'll show you one other thing here real quick. That's the wrong one.
And just while you're looking for that,
Oh,
so you can hear
there
me
you
again.
Yeah.
So just a couple days ago, we took 25 points because the trade, yeah, I was looking,
Sorry.
the trade, we had a 15 points going in, and then with the last trade, we ended up with additional 10 points. So we ended up with 25 points the day, and then the next day was 23.25. So we're not adjusting any of our rules. We're still doing the same exact trading, which is how you can make over 20 points as well.
Well, this is somewhat unrelated, but I want to talk about it here because I think it's really important to understand. You will have losing days, as I mentioned. And one of the things that Erin built into this tool is tracking, well, what was the maximum loss during the day? And these values are all relative to this category right here that we track, our research category, 8:45 to 4. And so there are days, I'm going to go take that out, that 20. So there are days that are losing days. This day, trading 8:45 to 4, or whenever we stopped trading, generally after 3 o'clock, lost 53 points. But earlier in the day, we were up 20.25 points. So if you were someone looking for your 20 points, then you made your 20 points that day and you're done. You're out for the day, and you didn't incur the 53 points.
Same with Monday, the one that I'm highlighting.
Right here? Yeah. Oh,
88.
yes.
So AES 20, that's what we call it. We made our 20 points. I think that was the 23.25 point day. And then if you kept trading, you had up to 88 points of profit. But then if you kept trading after that, you gave it all back,
Mhm.
which is why the personal trading plan is important to decide what your stopping point is.
Was the next day too. This is yesterday, 25 points. But if you traded the entire day, you're down 50 3/4. Now, we want to record, we do record all trades until we are done for the day and close the live trading room. And the reason that's important to us is because we're building a lot of data. We know what we can tell you what our 1 to 3 o'clock performance is. We can tell you what our 11 to 4 o'clock performance is. But don't look at these numbers and assume that that's what your performance was or what all traders' performance was unless you're actually trading every trade from 8:45 to 4. Don't make that assumption, because this right here will give you a better idea of how that day could have played out for you. That's a great example right there. Listen, if you were actually up 88 points, if you were up 50 points, if you're up 30 points, and your profit target on the personal trading plan is 20 to 22 points a day, you should stop, because anything after that, you're just running the risk of sacrificing a day towards your full 52-week plan in your personal trading plan.
And if you're close, and we talk about this in live trading room, let's say your personal goal is 40 points and you're up 35 points for the day. You don't have to take 5 points on the next trade. If the next trade goes to 4.5 points and then struggles, you can always lock in profit. Maybe it's a couple points to protect the profits that you've accumulated throughout the day. Those 2 days that we were just showing where there's profits and it ended up going back, you ended up giving back the 88.25 point day to the 11.25 point loss. The trades had profit on them. We just got into a small range where, usually this isn't the case, but asking for 5 points from NQ was like pulling teeth.
It
It
wasn't
just
working out for
it
you.
wasn't there. 3 points, that was great, but 5 points just wasn't cutting it in the afternoon on that day. And so there was profit on the trades, and there was opportunity to keep building profit so that you didn't give back the profits that you had gained through the morning.
But for our tracking purposes, to just be consistent, we have a pretty fixed, we're either going to make 5 points or 10 points on the trade, or we're going to lose 20 points, or on a natural reversal or indication of a close, we might lose less than that. But nobody should lose 11.25 points on a day where there were profits on every trade after, but you were up 88 points earlier in the day. That's why it's so valuable to use this information that Aaron and Michael share with you every day in the live trading room, along with your own personal trading plan. There's absolutely no reason you cannot build a very successful trading business if you are disciplined about that and you look at it like a business. You're not in Vegas or Atlantic City trying to win today. You're following a discipline, you're following a pattern, you're following signals, and you're being a good, smart, intelligent business person.
I love the personal trading plan. It's what I used to evaluate a stopping point as well. So we talked about the AES 20 stopping when you make more than 20 points of profit. But then you also want to have a cutoff point where the market's not behaving, you're down X amount, you just don't want to trade anymore. And so I went and used the personal trading plan to evaluate different stop levels. And I found that 60 points was pretty close to no stopping point, but then doesn't have you trading all day on not productive days. It limits your losses. It had a 90% win rate from day to day, not on the individual trades, but the actual you win 90% of your days and you lose 10% of your days. And I also, so far, once you get past 60 points, once you're losing 60 points, you don't come back to the 20 points. You might come back to positive 10, 15, but not the 20 points. And so since it's looking for over 20, it was, in my opinion, and it depends on your account size, but for me, that seemed like the perfect combination.
And here, this version is online. Aaron has the all plus fractals, 20 positive, 60 negative. $5,000, started with $5,000, again, maximum 3 contracts. We've got 35.5 weeks under our belt, 18 losing days in 35.5 weeks. That's pretty light. 21 points on the winning days average and 25.85 on the losing days. So tomorrow, when Erin is in the live trading room and she's trading and she hits 20, 22 points, somewhere in there, she's going to quit. She doesn't need to be at exactly 21. She's going to stop trading because she knows that if she continues to perform at this same level, reasonably similar level, that there's a strong possibility that at the end of 52 weeks, the account has earned $172,841, 35 weeks into the plan. Still got 20 weeks to go.
Michael's in our live trading room with us. He's saying we may not be in Vegas, but this is better than Vegas. The odds are in our favor.
That's true. That is absolutely true, Michael. Thank you for sharing that.
Mark, Bill's asking, can the AES signals be used in credit spreads and options, say on SPX?
Yeah, absolutely. So the way I would look at that is we've got a signal to go short here. So I'm on the S&P 500 on the 30-minute chart. Signal to go short on the S&P 500. Whatever strategy you want to use doesn't matter. If you have a short strategy, like a call credit spread, then you're looking for a short signal, like this trend bias signal. And you can see how it drifted away from that price level, so you'd open up your call credit spread. If you have a long signal, you might open a put credit spread, which will benefit from the decaying time value and the price moving away from it. So absolutely. A lot of people get confused thinking they need a certain signal, certain types of software to trade credit spreads, something different than they need to trade long or short options. As long as you understand how to recognize a long signal and a short signal on the adaptive entry system software, it doesn't matter what strategy you use to take advantage of it. This signal right here says that there's a high probability the price is going to move lower. This signal says there's a high probability the price is going to move higher. And then you just have to know what your profit objective is for whatever strategy you're trading.
Another question on options. What is your opinion on out of the money versus at the money buying?
So I always like to start at the money. And when I'm evaluating the cost basis of an at the money option, I know about how much I'm willing to put into the trade. So if the cost basis of an at the money option is more than I'm willing to put in, then I start evaluating further out of the money options. So I might start at a 50 delta, which is an at the money option. If that's too expensive for me, for my own personal capital commitment, then I might look at a 40 delta. I might look at a 30 delta. We had, not too long ago, we had a period of extreme volatility, and I was actually trading 10 delta options and was getting in and out of those for my profit target within the same day. So it really is just a matter of what your personal capital commitment is going to be to the trade, and then pick a delta and an expiration that work with your capital commitment. All right, folks, I don't see any. I'm sorry, Aaron, did you have another one?
I was just going to say exactly what you were saying.
I don't see any other questions out here, so we're going to call it a night, and we're going to close out of the room. Last question goes to Scott. Scott's asking, is that a new indicator at the bottom of the chart? It is. It's a new system that I've been testing. Kristen is fairly new to our team. She's been helping me test this. We've been trading it together, and it's looking very, very promising. It's not even close to being ready to release to our community yet, but very, very promising on trading NASDAQ 100 futures. And we've also been doing some trading on the S&P, or sorry, on the Russell 2000 futures, but very promising. The point production off of that new system is pretty powerful. So we'll let you know if we get to the point where we feel comfortable that we've validated it sufficiently, and how you might be able to take advantage of it. All right. Thank you so much for being here, everybody. We really appreciate you being part of our community. Aaron, Michael, Kristen, thank you for being here tonight. We will be back to trading tomorrow, 8:45 a.m. The live trading room opens. Thanks. Have a great night.